For today's trading idea, we have three. Let's start. The first one will be Uchi Tech. So one of the reason why we highlight Uchi Tech, because if you look on the screen, the chart uptrend is still pretty solid. So the recent consolidation or minor correction seeing the stock is actually has ended following a successive rebound within this 100 days movie average. So and another rebound is actually occur right within at 38.2 Fibonacci level. So the reason I would say downtrend channel here is could be at the end. There could be considered a flat pattern, but for me, since it's peak more than 2 months, so this is no longer become flat pattern. It will be considered a short-term downtrend channel. But regardless, as you can see, the RSI bouncing off within its support level, right, continue to strengthening their position within the oversold territory. And another one to look for is actually how MACD is actually about to flash a buy signal. Yet to flash, but about to. It's actually improving, trading volume also improving. So what we want is actually a solid breakout above the current downtrend channel. We think the current level is quite attractive for in terms of risk reward ratio, because at the current level, your risk about 3.85% with a cut loss below 3 ringgit and 75 cent, and meanwhile the immediate resistance will be at 4 ringgit and 12 cent and 4 ringgit 38 cent. Risk to reward will be quite attractive, 1 to 3.2, 3.8 downside risk and 12.3 upside potential. Meanwhile, for we cross-check with the quant scoring is also high using quant style momentum at 7.55. And then we have VS. VS also is our earlier buy on 19 March. The stock gained about 16.5%, slightly below our second target, I think at 95.5 cents over here. So the subsequent pullback saw the stock is actually bouncing off within the 200-day moving average, keeping the short-term bias remain intact. So we're expecting the ongoing uptrend to continue, particularly the new higher structure was formed. We see another rebound with the 200-day moving average. Yesterday again has could start a new upcycle backed by what we call the fresh uptick in RSI. The only thing that left for the stock will be at trading volume, which is slightly lower. A follow through with higher trading volume could actually signal a continuation of the going uptrend. Regardless, we think the stock uptrend still pretty much intact. We like the stock, so we reiterate our technical buy with a new and higher target price at 95.5 cents, while the next resistance will be introduced at 1.02 cents. Stop loss also has been revised higher to 81 cents. In terms of risk to ratio is 1 to 2.2. I mean 7.4% downside risk and 16.5% upside potential. Right, last but not least, we have LGMS. So one of the reason why we highlight, if you look the long-term trend for LGMS, is does look like start to shift upward, particularly after the stock stage a solid breakout move over the long-term trend line over here. We've seen a breakout followed by a classic return move and another gain yesterday on a back high trending volume, indicate that the stock could actually completed a classic 1, 2, 3 pattern. So of which is often occur within the wave 3 of the elite wave. Now, momentum has been picking up. You can see the RSI is bouncing off the long-term average line. MACD remain on the positive side, so we're expecting the uptrend to continue as we put our next resistance at 1.19 cents and 1.34 cents, while the color will be below 99 cents, which means with 9% downside risk, we saw a potential upside over 23.4%.